This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, August 4, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is sitting at $63,909, up 2.2% on the day, defying a fear and greed reading of 14, a level so deep in panic territory that it usually marks a local bottom. Yet, underneath that green candle, institutional leverage has vanished, Iranian capital is fleeing at record speeds, and Uniswap is crashing hard. We are looking at a market where price and psychology are completely detached. Good morning. I'm your host for ShadowQuant Crypto Edition. Today, August 4th, 2026, we're dissecting whether this rally is a genuine accumulation phase or a liquidity trap waiting to snap shut. Before we dig into the charts, let's look at the macro calendar shaping our week ahead. The data pipeline is active right now. First, we have durable goods orders releasing today. This is the key inflation gauge for producer pricing, directly impacting the cost of capital narrative that drives risk-on assets like crypto. Next, JOLTS job openings will give us a pulse on labor market tightness, any surprise there could force the Fed's hand later this year. Finally, the trade balance report closes the day. From a strategic standpoint, Apex notes that with the VIX sitting low at 15.99, any volatility in these domestic data prints will likely translate immediately into crypto volatility, as algos hunt for the first directional cue in the equity markets. Turning to the broader market overview, the total crypto market cap is holding at roughly $2.27 trillion, up 0.8% on the day. But don't let the green header fool you. The internal mechanics are fracturing. Bitcoin is anchoring the ship, but the crew is mutinying. We have massive inflows from Iran spiking 700%, futures demand hitting 2024 lows, and a sector rotation that is violently punishing decentralized finance governance tokens while rewarding Layer 1 infrastructure. Let's cut through the noise, with the headlines driving this bifurcation. I want to address the elephant in the room immediately. The fear and greed index is at 14. That is maximum panic. And yet, Bitcoin is green. This is not a healthy divergence, it's a psychological rupture. Retail is stepping in to catch the knife because they're tired of the downtrend, but the institutional mindshare has simply checked out. Until that sentiment score breaks above 20, every green candle is a trap. Speaking of traps and headlines, Cointelegraph reported that Bitcoin futures demand has fallen to 2024 lows, sparking debate on whether institutions are exiting entirely. Meanwhile, Coinbase Global, which backs many of these derivatives venues, is facing headwinds as Core Scientific turns lower after disappointing Q4 results. On the flip side, PayPay, which owns 40% of Binance Japan, is seeking an up to $1.10 billion Nasdaq IPO. And geographically, Cointelegraph notes Iranian crypto outflows spiked 700% after US-Israeli airstrikes.
The futures demand collapse is the most critical flow metric I've seen this month. It tells me that the current $63,909 price tag is entirely spot-driven. There is no leverage supporting this move. Institutions aren't betting on upside, they are hedging or exiting. The 700% Iranian outflow is a separate beast. It's a supply shock risk. That is unstructured liquidity flooding exchanges looking to dump, not buy.
And let's not ignore the structural damage in the mining sector. Core Scientific dropping after Q4 isn't just a stock move. It's a signal that the hash rate economy is undercapitalized. When the miners are weak, the network security premium erodes. Combined with the Uniswap crash, we are seeing a flight to safety that is ironically risky. Everyone is piling into Avalanche and Cardano, while ignoring that the foundational decentralized finance and mining layers are crumbling.
Let's bring that fragmentation into focus. We need to look at the assets actually moving today. Starting with the anchor, Bitcoin. Bitcoin is at $63,909, up 2.2%, with a 24-hour range between $63,112 and $64,135. Grid, how is the structure holding up given that futures demand is vanishing?
Structurally, Bitcoin is exhibiting classic weak hand shakeout behavior. The fact that it held $63,909 despite the headline regarding futures demand suggests a passive bid wall exists in the $63,000 zone. It's not attacking resistance, it's defending support. The 24-hour high of $64,135 wasn't breached decisively, which means sellers stepped in quickly. We are in a consolidation channel, not a breakout regime.
That consolidation is being bought by entities not found on futures ledgers. The spot inflows are consistent with the $55.66 billion in daily volume we're seeing. However, the lack of open interest expansion is concerning. Without new leverage entering the system, this $63,909 level is thin. One large OTC block sold into this spot book, and we see red candles instantly. The liquidity depth here is shallow.
Shallow liquidity plus extreme fear equals a bounce that lasts exactly as long as the panic sells. The social chatter is shifting from exit now to dip buy, which explains the mild green in Bitcoin. But remember, the 7-day trend of the fear index rose slightly from 12 to 14. Wait, no, the score is 14, the trend is 12. The sentiment is stabilizing, yes, but it's stable at rock bottom. This isn't confidence, it's exhaustion. Moving to the sector leader, Avalanche. Avalanche is trading at $6.81, up a robust 5.7% on the day, with a 24-hour high of $6.96. It is clearly outperforming the broader market cap gain of 0.8%. What's driving this rotation?
Technically, Avalanche has broken above its immediate descending trendline. The close near the 24-hour high of $6.96 is a strong bullish signal. Unlike Bitcoin, which is grinding sideways, Avalanche has momentum. If we hold above $6.80 on the hourly close, we confirm a short-term reversal pattern. This is pure relative strength rotation, capital fleeing stagnant Bitcoin for higher beta plays.
It's also a safe haven for retail liquidity. With Bitcoin futures dead, speculators are parking funds in L1 with active ecosystems. The on-chain activity for Avalanche is picking up. People are moving funds off centralized exchanges into staking contracts. They are locking up supply, which reduces float. That's why Avalanche is up 5.7%, while Bitcoin is only up 2.2%. It's a supply squeeze, not a demand surge.
Or it's a bubble forming in isolation. Look at the laggards. Uniswap is down 5.2%. When the decentralized finance sector, which usually leads the alpha, is getting crushed, you have to ask why investors are buying Avalanche instead. Is it genuine utility adoption, or just chasing the green arrow because it's the only one left? The VIX is low, so equities aren't dragging this down, but the lack of breadth is a warning sign. If Avalanche fails to hold $6.80, it will wipe out gains twice as fast as it made them.
Let's look at that warning sign, Cardano. Cardano is at $0.19, up 4.5%, with a 24-hour high of $0.19. It's joining Avalanche in the Green Club, but is this part of a broader altcoin revival?
Cardano is respecting the $0.19 support level aggressively. The 24-hour low was $0.18 and it bounced cleanly from there. This is a textbook support test and hold. It's lagging Bitcoin in percentage terms but leading in technical cleanliness. It's not breaking out to new highs, but it is refusing to participate in the downside. It's a defensive accumulation play.
The capital flow here is interesting. We see small wallet accumulation increasing. Large holders are static. This suggests retail is front-running a narrative, possibly related to the upcoming legislative movements. The CBDC ban in the Senate housing bill might be giving privacy-focused or decentralized communities a boost in morale. Cardano's community is highly sensitive to political tailwinds.
Morale is definitely up. The sentiment around Cardano is less hostile than Bitcoin. In an environment of 14/100 fear, people are looking for safer altcoins, ones with established code bases and no smart contract exploits. Cardano fits that profile. But again, do not mistake this for a bull market. This is a scared money rally. Investors are hiding in Cardano because they are afraid to lose capital in more speculative tokens. Now, let's examine the biggest loser in our top-tier set, Uniswap. Uniswap is at $3.85, down 5.2%, with a 24-hour low of $3.82. While the rest of the market is green, Uniswap is bleeding. What is happening inside this protocol?
This is the canary in the coal mine. Uniswap is crashing while Bitcoin rises. This indicates that smart money is specifically rotating out of governance tokens. Why? Because governance tokens offer no yield and carry regulatory risk. With the Senate pushing a CBDC ban, there is ambiguity about how decentralized finance intermediaries will be treated. If you can't earn yield and you face regulatory uncertainty, you sell Uniswap. This isn't just a chart pattern. It's a fundamental de-risking by sophisticated players.
The flow data confirms it. We are seeing net outflows from Uniswap liquidity pools. Traders are moving liquidity to more productive yields elsewhere, perhaps into the Avalanche or Solana ecosystems mentioned earlier. The TVL in Uniswap is contracting. When TVL drops, the token price follows. This is a structural issue, not a temporary sentiment glitch. The 5.2% drop is a repricing of regulatory risk.
On the chart, this is ugly. Uniswap has broken below its recent consolidation box. The $3.82 low is a new support level, but the velocity of the drop suggests sellers are aggressive. There is no bid wall here. Unlike Bitcoin, which had a bid at $63,909, Uniswap is falling freely. If it loses $3.80, we open up a gap down to previous monthly lows. Technically, this is a distribution phase.
Finally, let's touch on Solana. Solana is at $73.79, up 1.9%, with a 24-hour high of $74.15. It's tracking slightly closer to Bitcoin's performance, acting as a bridge between the giants and the altcoin mules.
Solana is holding the $73 level firmly. It's not leading the rally like Avalanche, but it's not falling like Uniswap. It's in a coiling mode. The 24-hour high of $74.15 acted as minor resistance and pushed it back. It's essentially mirroring the broader market cap trend of 0.8%, neutral to mildly bullish, provided it doesn't slip below $73.
Solana is benefiting from the high throughput narrative. As fees remain low on Ethereum and Avalanche struggles with congestion, capital is flowing into Solana for daily user activity. The on-chain metrics show active addresses are steady. It's the workhorse chain. While Uniswap is dying, Solana is working. That's why it's up nearly 2% while the market cap is barely moving.
It's the boring choice. And in a market with 14 over 100 fear, boring is good. Traders aren't hunting for the next 100x gem right now. They are protecting principal. Solana offers enough upside with less catastrophic downside risk than microcaps. The sentiment around Solana is pragmatic. It's not exciting, but it's trusted.
We've covered the major movers. Let's step back and look at the whole board. We have Bitcoin holding $63,909 on spot bids alone. We have Avalanche surging on retail speculation. We have Uniswap crashing on regulatory fear. And we have a 700% spike in Iranian outflows threatening supply dynamics. How do we synthesize this chaos?
This is a classic bifurcation event. Grid correctly identified that Bitcoin is defending support at $63,909, but CIPHER pointed out that this defense is thin due to collapsed futures demand. Pulse noted that sentiment is at 14/100, meaning there is no consumer confidence fueling this rise. Therefore, we are witnessing a liquidity-led rally, not a demand-led one. Avalanche is winning because it has the highest beta to retail liquidity, while Uniswap is losing because it carries the highest regulatory beta. The risk SPECTER flagged, core scientific weakness and decentralized finance decay, is real. The market is structurally fragile. We are not in a bull market. We are in a consolidation phase where relative winners and losers are being sorted out before the next macro direction is chosen.
So the takeaway is clear. The market is green, but the foundation is cracked. Bitcoin is holding $63,909 by default, not by strength. Altcoins like Avalanche and Cardano are rallying on retail speculation in the absence of institutional leverage. And Uniswap's 5.2% drop warns us that decentralized finance governance assets are still under fire. Tomorrow, keep your eyes on the durable goods data and whether Bitcoin can hold $63,909 against the backdrop of falling futures demand. If Bitcoin breaks below $63,000, the entire altcoin structure may unravel. If it holds, we stay in this fragmented grind. This is ShadowQuant Crypto Edition. Stay sharp and thank you for listening. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.